We believe interest rate settings are now at a level which is creating real pain out there with existing property owners, and would-be home buyers would be deterred at this point in time. Let's also keep in mind that inflation looks like it's set to slow next year, so the real burden is actually quite substantial. So this is one of the key reasons why we've come out with more negative forecasts in 2024 compared to a more positive forecast we had for 2023.
By how much do you see average national home prices falling by?
Well, overall, the forecast is a mixed market. The forecast is that housing prices for the nation will change between -1% to +3%. That sounds like more of a flat market, but within that, we're forecasting housing price falls for Sydney, Melbourne, Hobart and Canberra in particular, offset by price rises or forecasted price rises in Brisbane and in Perth in particular.
Why do you see Brisbane and Perth being somewhat resistant to the economic headwinds affecting the other capitals?
Yes, well, we're a little bit more positive that the Chinese central government stimulus program they have will actually positively affect the Chinese economy in 2024. And what that means on the ground here is greater demand for our base commodities. Indeed, I think we're already seeing indicators of that playing out now by virtue of the elevated iron ore price we've had over recent weeks. That directly impacts upon the Perth economy and indirectly impacts upon the Brisbane economy, which historically has had some indirect exposure to commodity booms. That, combined with the fact that the rental markets in those two cities are super tight right now, means that we believe house price rises will occur in those two cities despite the elevated interest rates.
What type of gains are you expecting in 2024 in those cities?
So for the city of Perth, the forecast is that prices will rise between 5 to 9%, and for Brisbane, 4 to 8%.
You've identified some similarities in Sydney and Melbourne where you don't expect prices to fall across all markets. Why are the biggest cities a bit of a mixed picture?
They're a mixed picture because we need to look at who are the mortgage buyers, people who are buying with substantial mortgages, versus the cash buyers. Okay, and the cash buyers, and there's plenty of them in Sydney and Melbourne, are buying at the top end of the housing market. They don't need to take out a loan when you're buying a $20 million property. However, when it comes to properties between, say, $1.5 million through to $3 million, we're talking predominantly people who are borrowing this money. Now, they're borrowing, of course, at an average lending rate now coming up towards 7%. This is a substantial interest rate, especially if inflation starts to fall back next year. So with that, combined with the fact we are expecting a slowing economy, I think it's starting to come through fewer job advertisements, should mean that the middle areas of Sydney and Melbourne will see housing price falls over 2024.
Why are you most pessimistic when looking at Canberra's outlook?
The Canberra outlook, well, we need to consider the fact the background behind Canberra so far this year has been more supply, a little bit more per head of population compared to the other capital cities. That has resulted in a rise in rental vacancy rates. Canberra is just one of the few cities out there that no longer has a rental crisis, in our opinion. And so we've actually recorded a fall in asking rents in Canberra over the past 12 months. Now, given our assumptions of a slowing economy, elevated interest rates, and Canberra not really being the city which is receiving the influx of overseas visitors, we are anticipating housing price falls next year for that city.
Your base scenario is based on migration rates easing in 2024. If that isn't the case, could property prices remain in positive territory across the country?
Yes, they could. So for this calendar year, we estimate that the population's expanded by some 575,000 people, or about 2.3%. That's the fastest for any OECD country in the world. Now, we think this year's a bit of an abnormal event, and it still stems from the opening of our borders way back in late 2021. We think there'll be a degree of a revert to mean, where we'll see less international students coming through in 2024, hence the reason why we're forecasting a slight decline in the rate of growth of migration.
Now, given the majority of borrowers have now rolled off their low interest fixed loans onto higher variable ones, and there is still a chance the RBA could yet hike again in this cycle, are you expecting to see an increase in distressed selling in the coming months?
Absolutely, we're forecasting an increase in distress listings. Indeed, on our series, distress listings are now trending up over the past 2 months. There's still a relative benign levels and levels below what we had pre-COVID. But as a research house, we like to follow the trend, and it's pretty clear to us the trend is up in terms of distress listings, and it is certainly one of the factors why we've been a little bit more negative for 2024.
Louis Christopher, thank you.
Thank you.